Hello, everyone, and welcome to our session today, Measure What Matters, How Financial Data Tells Your Organization's Story. All right, we're going to go ahead and get started here in a minute, but please make sure you utilize the chat box at the bottom of your screen to let us know where you're joining from. We'd love to see who we have on, your organization's name. Also, there is a Q&A feature as part of the webinar. You'll notice on the bottom of your screen as well, there is a box that says Q&A. We ask that any questions you have, you put them in the Q&A box so we can answer your questions and make sure we didn't miss anything. All right, so we will go ahead and get started. So welcome to Measure What Matters, How Financial Data Tells Your Organization's Story. I'm going to go ahead and introduce our panel for today. We have Jim Simpson, who is the CPA and Director for Financial Technologies and Management. How are you today, Jim?
I am fantastic. Thank you, Gabby. Glad to be here. And it's great to meet all of you. Thank you for taking the time today.
Happy to have you here. And we have Chris Fink, who is the Chief Operating Officer of Ariva. How are you today, Chris?
I'm well, thank you. Thanks, Gabby, for putting this together. Thanks to everybody for joining, and big thanks to you, Jim, for being a part of this.
And my name is Gabriella Salemi. I'm the Director of Marketing here at Ariva, and I will be your moderator for today's session. All right, so we're going to go ahead and start with a poll. First question up, we would like to know how many different solutions are you using to manage donor activity? And what we mean by that, these can be one solution to maybe keep track of all of your donor data, another to manage your donation pages, event pages, another for volunteer information, any kind of software or solution that you're using to manage your donor activity. Can even be Excel spreadsheets. Okay, give a few more seconds. Got some answers pouring in.
Yeah, and Gabby, when you said that, I was hoping maybe their only solution is Excel spreadsheets, which I've seen before too.
All right, so looking at the results, the majority of you, 41%, are using 2 solutions. Some of you are using 3. We've got a few using 5 or more.
Oh, wow.
Some of you are using
Wow.
4, and then a few using
Wow.
1.
Okay. Quite a few using 3 or more.
Yeah.
All right, so we want to ask a follow-up to that question. If you're using more than one solution, are you having to move data into a donor relationship management database? So are you having to move all of that donor, volunteer, event information into one centralized location?
I like the third answer. I'm not sure.
All right. Okay, let's go ahead and look at the results. So 46% of you are moving that data, 38% are not, and 15% are not sure. Next, we would like to know, do you struggle pulling reports or getting accurate data out of your donor management database? All right. So 67% of you say yes, that you have difficulty pulling reports or making
Wow.
sure the data is accurate. 33% of you do not.
Well, more do than don't. So.
And last question, we'd like to know, what is your annual budget? We give you a few options there to choose from.
Usually that doesn't include in-kind, but I guess, we'll see.
All right, so Interestingly, it's a tie.
Hmm.
The majority of you are over 5 million or 1 to 3 million in annual budget.
Interesting.
21% are between 0 and 500,000, 16% 500,000 to a million, and 11% are 3 million to 5 million.
That's interesting. Like quarter.
Good mix.
Yeah, it is a
Yeah.
really good mix. Yeah.
All right, and then I will pass it over to our panel.
Okay. Thanks, Gabby. Yeah, I just want
Thank
to, I'll
you.
set the stage here a little bit. I'm coming from more of a perspective of donor management software. Jim's coming from his perspective is really more of an accounting finance side. But we'll give those perspectives here, but I wanted to really just kind of create a backdrop of, what we're talking about is important, and we're seeing, yeah, Jim and I were just at some conferences last week, had a lot of discussions with a lot of organizations, and we hear
Fine.
and see struggles that nonprofit organizations are having, but the statistics really do bear that out a bit on the fundraising side. Particularly, these statistics we're looking at here is from a Giving USA report that just came out recently, about donor retention, and and this has always been a perennial issue with nonprofit organizations, but the needle has not moved a whole lot, and in some ways it's moved in the wrong direction. So, really, the national average retention rate is 45%, but in reality, the first time donors, the retention rates are not good at all, under 20%, which is really a reflection, I think, of the challenge nonprofit organizations have in terms of donor engagement. And we'll talk about that a little bit, but and then 53% of nonprofits cite donor acquisition, so getting new donors as a big challenge for them. And then you're just dealing with the headwinds overall within the nonprofit uh, sphere in general, right? Which is we're seeing an increase actually slightly in overall donations, in terms of total dollars, but the number of individuals that are giving are actually going down. So there's more competition out there for dollars from individuals in particular. And as we all know, ideally, organizations in terms of revenue breakout want to see the majority of their donations coming from individuals, and we're talking to a lot of organizations who are they're honestly scared. There's a lot of fear out there about what's happening. They're worried, that government money, grant money is not there, or is not going to be there, and
Right.
really they're scrambling to increase their individual donor base. So I just want to set that backdrop. Jim's going to talk a little bit about that, but really,
Mhm.
um, the it it it's given these stats, it's not surprising that nonprofit leaders are dealing, and there's also inflation, the uncertainty around the
Mhm.
economy, and then
Mhm.
all that this competition for funding. So it basically is telling us that it's more important than ever to boost donor engagement, create efficiencies within your organization and within the fundraising process, and gaining really clear visibility into fundraising within the context of your organization's overall financial health, right? So
Mhm.
and I've seen it over and over again, sort of the struggles, not only internally with managing your donors, but also how your donor database dovetails with the financial side of your organization. How does data move between those two? Are you able to reconcile between those two solutions? Because a lot of times
Mhm.
how the development department, how the fundraising staff want to manage and maintain donors and donations and recognize donors for what they're giving isn't always exactly the same as your
Mhm.
accountant wants to do it. So, we can talk a little bit about that too. But really, I just want to set that as a backdrop of
Yeah.
why we're having this discussion in the first place.
And, and Chris, just to add to what you're saying, I felt like that government funding affected all the other types of funding because it just created uncertainty. You said it, but the foundations and all the other funding, and I was thinking of like private foundations,
Mm,
that are really individuals that have collectively come to establish their own entity, to help with the giving as well, have all of them have had, if they're involved in federal funding at all, it's just created uncertainty that's kind of, don't like the word trickle, but it's kind of created that uncertainty that has really influenced the delayed funding, is a nice way to put it, maybe.
Mhm.
But it's also affected what you're saying. So no, you said it just right. So,
No, that's perfect. Yeah, you summarized it great. Thanks, Jim. Okay.
yeah.
All right, and then we'll talk a little bit about implementing the right solution for financial reporting. Now, financial reporting is kind of a broad term, really. I mean, there's financial reporting you're getting out of your donor database, but also out of your accounting system as well. So we'll give those two perspectives. But um, in that same report I mentioned on the last slide, nonprofit leaders acknowledged just a lack of process automation and organizational efficiency and manual time-consuming reporting as one of their top internal challenges, in spite of the fact that 85% of organizations out there are using some sort of accounting software, although
Mhm.
unfortunately only about 64% of nonprofits are using donor management CRM software, which is actually shockingly low. But we're just seeing too many organizations out there, if they are using something, or they're even if they're in spreadsheets, they have either too many point solutions, they have data in multiple silos. We just saw that
Mhm.
in the survey you just did, Gabby, and it just makes it very difficult to have efficient and accurate reporting on your organization, whether it's coming from your donor database or on the financial side. So, and ultimately, that's going to impact, how you being able to fully understand how your constituents are engaged with your organization, which then makes
Mhm.
it challenging for donor retention, donor acquisition, engagement, right? So having a cohesive fundraising and financial management system can really help your organization drive efficiency, right? Visibility within your organization and externally, and then collaboration and ultimately impact, which is really what it's all about, right? It's about optimizing your fundraising operations, cultivating your donor support, and automating some of those tasks so you can focus your resources on driving your mission, right?
Yeah, and Chris, you already said it, but that percentage you said of donor systems, people have accounting systems because they're required to have audits in a lot of
Right.
cases. But I would wonder if they weren't required to have audits, would they even have QBO or other accounting systems either? My
Yeah.
guess is probably not if the compliance in the IRS requirements did not require that as well. So, I would think every organization should have some sort of donor system, just as they should have some sort of accounting system, general ledger system as well. But yeah,
Yeah, yeah, and that's a great segue into the next slide, Jim, which is
uh,
really you talking about, more on the financial side, what's going on.
yeah. And what I was trying to do with this, and I appreciate those opening comments, Chris, very much. I thought about financial reporting, and you could really think of this as fundraising reporting as well. But I always find that if information is not accurate and reliable, then it's probably not very useful as well. That's not on the slide. I try not to read to people. And then it always should be timely, especially in today's world where everything is changing so quickly. And then I always think that make sure there's not a disconnect between your fundraising and your financial information, to make sure it ties in with the organizational history, the story of the organizations, its goals, and its programming. You should be able to segment or break out all of your program activities as well, and make sure that those things are in sync with the financial side as well. That also matches up with what your donor intentions are. So making sure that the restrictions on those donors are met. Most of the revenue recognition standards, sorry for talking accounting for a second, but basically most of those donor restrictions are, tied to the donor side on the revenue recognition side. So, and then lastly, just make sure it's appropriate. It matches the board's role and the knowledge level. So a lot of times I think we might assume that the boards know more than they actually do. And so, I think we need to make sure that as that changes, hopefully it's getting better. There's more literacy at the board level, but if, making sure that that matches at whatever level of board competency we have, that matches up with the board level, and then of course the committee structure beneath it. So hopefully you have development committees, finance committees, as well. But just making sure that when you go for these reports, that if these reports don't have these characteristics, at least the financial reports, then you probably don't have great reporting.
Yeah,
Yeah,
that's
we
a
can, and
great point, Joe.
Gabby's reading my mind. We'll go ahead and move to the next slide. And then this is going to talk some financial reporting. I promise I won't bore you with this because it can bore myself. But basically you think of a balance sheet. If you happen to use QBO or CQBO, QuickBooks Online, I'm not supposed to use acronyms, but like the statement of financial position is the official name. So if you look at your audit report, which most people just put in their applications, don't really look at them. But that's really your assets, liabilities, and your net assets. Those should be broken out. You should really know where your balances of all your grants, all your fundraising is at any point in time, especially at least monthly. And then the income statement or your statement of activities, the statement of activities is more the audit report that we just kind of looked at slide. But that is going to look more primarily when you're looking at budgets. You want to look at the budget. You want to look at how well your programs are performing, especially compared to budget as well. And then don't forget about the statement of cash flows, particularly considering we've seen a trend back to what Chris was opening with, is we've seen organizations use their operating reserves to cover deficits, operating deficits over the last couple of years. And a projection will kind of look at cash flows in and out of the organization. Those are accounting terms, operating, but mainly on the operating side to make sure that you are covering your operating activities and you're turning your receivables. You're not getting behind on your accounts payables and things like that. Also, the statement of functional expense, if you have an audit, is the program breakout that you have to delineate your program activities, your projects, your programs that you do, and then also the supporting activities, the management activities, the fundraising activities as well. And then I also like to put in there just budget versus actual, so that you have other types of financial reporting that's more management based, more executive based, to include the organization's actual performance compared to budget as well. And then some of the compliance types of report, I still consider an audit compliance oriented. That if you are required to have an audit, and we could do a whole seminar just on that. But basically, what are the audited financial statements, and then the IRS Form 990, which most people don't understand and literally can review it and have no clue what it really should say. But that's an annual requirement. It's really important that you stay current on that. If you do not file that for 3 consecutive years, you will be dissolved by the IRS. And considering there's no employees at the IRS currently, you really don't want to take that chance of being dissolved as well. I do have a very dry sense of humor, Chris.
I like it.
There we go. All right. That's good on that one. And then I think it's important that you take the reporting, like we just talked about, and break it into the different components of reporting. And if you want to help me add the development side as well, but on the compliance side, that would be one type of reporting. Nonprofits are really good typically at meeting the compliance aspects. However, I would say that they're not always as great about looking at the evaluation. I'll skip to number 3 there, but the programmatic side, generating reports that kind of support the program side as well. And then I think there needs to be more effort focused on the last 2 there, the taking actions. What do we do, especially in 2025, to react to changes to the external environment? What do we do when we have problems with our programs, 2 Ps there? And then what do we do when we are dealing with the budget and cash flow issues as well? And we need to be proactive on those things. Historical financials really don't help us manage going forward. And so that leads to the last one there, which is we need to really have a lot more planning. Businesses have more planning documents. So how can we generate more planning documents around trends and new programs and different scenarios so that we can make better management, more informed decisions as well. So I would encourage you to try to make sure that your reporting includes all aspects of that as well. So.
Yeah. There's some slides coming up for me that'll go into more depth on the fundraising reporting side.
Okay. And then if you've had any financial difficulties, now this could be fundraising difficulties as well. But basically, I think that's where you have to double down and you really have to be more intentional around providing more details around the reporting, or maybe even provide some additional reporting. You may need to increase the frequency. For example, cash flow. Maybe you have a cash flow projection that is done monthly, but now that we're into a situation where we have payrolls that are paid bi-weekly, maybe we need to move to a weekly cash flow projection because we have financial difficulties. So the frequency may be more frequent because of the need and the difficulties that you have, and then just updating those related projections and forecast against our plans, which hopefully you have the financial plans. And then I just think managing cash flow diligently with everything that's going on in 2025. I've had a firm for 26 years now, and I haven't seen these things since COVID myself in terms of just the uncertainty, as well. And so I think it's just really important that even when you have cash, to make sure that you're managing it diligently as well.
Yeah,
So
I mean, the difficulty that I see, Jim, I'm sure you have lots to share on this, is on the reporting side, whether it's on the financial side or the fundraising side, is well, there's a few things. One is not initially setting up, say your chart of accounts or your fundraising software in a way that's going to allow you to get those reports out of the solution. I
yes,
think
sir.
organizations are too quick to just implement a solution, get it
Yep.
up and running before
Yep.
really thinking through what they're trying to get out, which really should drive how they set that
It,
application
it,
up and how your chart of accounts are set up and how your fundraising software is set up, right?
yeah, and I really like the incremental implementation idea. You have that initial implementation, but don't always constantly try to improve, what you're doing, because your needs are going to constantly change. So if you're not always trying to improve the software utilization, then you're not going to be able to stay up, basically. So,
And the incremental reconciliation too, right, Jim? We have clients that
yes,
call us at
yes,
call us in January or February. Hey,
yeah,
we're not balancing with our accounting
yeah,
system. Oh,
yeah.
have you been doing monthly reconciliation? No. Ooh, that's going to
No,
be a
no.
challenge then, right?
No, it's really our first reconciliation ever
Yeah.
and so yeah, you definitely want to do that. For one, it provides some insight into the fundraising to see, whether or not I've learned that terminologies can mean different things within different departments. And so, making sure that truly is revenue or cash or, based, then that will help with that reconciliation. Also, I saw some stats, Chris, on this at one point that only 15% of what we can raise is cash, and the other 85% is other things that can be given. I don't know if that's still true. I have no
Wow.
idea. It's been maybe too long, but
Yeah.
basically, so you may have in kind, but that doesn't equate. That doesn't really help your financial position per se, unless it's something that you wouldn't have to buy on your own, the organization. So I think those reconciliations probably need to happen more often. And that's probably where auditors are not as astute in that area as they probably should be. And like you said, I think once you get past doing something less than monthly, it's very difficult to do it just once a year and then assume that it's
Yeah.
actually going to reconcile. And I'll explain maybe why real quickly. I know I don't want to go too much, but maybe your beginning balances going into the year are wrong. So you even have the
Mm,
wrong numbers to start, the year. So how are you gonna, or you might have a pledge that's a multi-year, so how are you gonna really reconcile,
yeah.
to things that really aren't reconcilable, I
I,
guess.
al- yeah, that's a great point too. And I also see clients who rush to integrate the fundraising solution
Yes,
with the
too
accounting
quickly,
solution, and
too quickly.
before they have even been able to reconcile via reports first. So I
Yep.
always say, let's make sure that you can reconcile via reports between the two
Hmm.
solutions first before
Yep.
you rush to
Yep.
integrate and start actually sending data directly from your fundraising system into your accounting system, right?
Yep. Yeah. And then make sure you really understand your own processes. I mean, I know this is not a process class, but make sure you really truly understand what you're doing. You may not be the one actually doing those clerical transactional tasks. So make sure that you understand what's really happening. Make sure the dates that are being used, make sure how, maybe deposit dates, gift dates, make sure those things are are being done properly, or at least how you want to. And then you have a better mechanism for, back to what you just said about integration between different systems.
Yeah.
Yeah. Okay, this is still me, isn't it? So key
It is.
steps. So key steps. So invest time. I think the important part is make sure you have like an acceptable, I think it's kind of like know your audience. Make sure you have a good, acceptable reporting format. And then we talked about making sure that you have that board and finance committee. So you're going to develop summary categories. You're not going to give them every account that you have. You probably shouldn't if you are currently doing that. And then a lot of times you can use those same categories. So like, for example, I'll give you some examples: salaries, benefits. You might have a lot of benefits that you provide to your employees, hopefully, but basically you might want to just summarize that as benefits. And so same way with like professional fees, if you outsource professional fees, or subscriptions, maybe you have a lot of subscriptions that you use. So maybe you categorize all those together. But you want to use those categories. But a lot of times you can use the same categories that you present to your finance committee, assuming you have one. You may be a smaller organization. That's why we asked about budgets that could use their exec committee for that. Or a lot of times those are the same reports that you could use for the executive management. So the CEO, the exec director, the president. I mean, there's lots of CEO, different titles that you might get, as well. So. But one of the things I wanted to provide, and again, if you don't have the CFO or the finance director on the call, this would be information you could share with them as well. But one of the things I thought about in all of the financial reporting presentations I've seen over the years is that a lot of times we provide numbers to people, and we just assume that everyone is a numbers person, which they're not. And I was not an English major, I was an accounting major. And so I like numbers, and I just assume that everyone else likes numbers. But I realized that's not really true. So what I really thought of is providing a narrative which kind of summarizes the key financial highlights to the number, and maybe you highlight some of the variances to budget, the variances to historical spend, like year to year comparison. So if the revenues are going down, maybe you're kind of showing that, and you're showing why, maybe we didn't receive this, or they've cut the award from year to year, as well. And then highlight maybe the monthly and that fiscal year change, to some of the balance sheet categories as well. And then same thing about surplus and deficits. Again, I realize this is more for the accounting department, finance department, but again, comparing to the operating activities and maybe separating out non-operating, so kind of non-cash activities, so like depreciation on your building, or other types, in kind, or other types of things that really wouldn't be investment earnings, things like that, that you could pull out as well. And then you might add notes to the reports. So I always like to kind of put notes because people don't really want to look for things. And so you can kind of like put in some notes. And then the last thing, which we don't probably have a lot of time for, but it would be, and this would be, developing like a dashboard that you use. So a lot of people are visual learners. So if you could provide like a dashboard, but in that case, you really need to determine what are your key performance indicators. And most of the research I've seen over the years has said maybe you've developed 3 to 5 key performance indicators that you will kind of establish goals and objectives for, and some trends that you could kind of meet. And so you kind of have to figure that out for the organization as well. And then the last thing I'd say on the key steps is just make sure that you're providing that financial management training during the orientation to every board member. Don't assume just because they're a banker that they know, accounting, and then don't, make sure that you're not only providing it during the orientation, but also on a regular, I say annually, but at least on a regular basis as well. But I would think those are some of the key steps of the ways that you could improve the financial reporting and the delivery to the audience as well. Okay, so in terms of how to prepare your nonprofit financial reports, you do want to assemble that financial data. If you can use dedicated nonprofit accounting software We didn't necessarily have a poll question on the accounting software you use, but the smaller organizations typically use QuickBooks or QuickBooks Online. Most people at this point are using QuickBooks Online. You can get it to get closer to being a nonprofit accounting package. It's still not really a nonprofit accounting package, but you can kind of get closer to that. And then the other thing is reviewing and audit your nonprofit financial statements to make sure that there's no errors as well. And then they're shareable as well. And then we only work with nonprofits. So make sure you're working with there's a lot of accounting firms out there, but just make sure that you're working with someone that really has expertise in the nonprofit space so that you can maybe they can help you develop that financial reporting package. Unfortunately, sometimes you may have an auditor that may or may not, for independence purposes, be the person to help you with that. So that's why you might need more of a management consultant that's kind of not independent, if you will. So we're not really independent with our clients, so we're more pro-client than we are independent auditors. So, all right. And then we did have this kind of an example of and these are some terminologies that aren't QBO. These are just the same things we talked about, but a board financial reporting could include a balance sheet, statement of financial position, revenue expense with budget, revenue expense with actual comparison. Again, I like showing program impact as well, a couple different terms for that. And then also, like I said, putting in the notes in the narrative. I actually take the narrative and put it on top simply because that way, they might just get to the narrative and never get to the reports. I also try to put them on a single page because I know most people might not even read a single page nowadays. So I usually try to keep it to a single page as well. And then I can use the committee is the one that's supposed to drill down. So if you actually have a good finance committee, again, you may or may not have that, or you might have an executive committee that acts on that behalf. But I usually take that revenue expense detail. So that would be a more detailed report. And then I might also include like a statement of cash flows or cash flow projections, forecast. Now that might get back to the full board, but usually it gets presented by the treasurer. And then usually the finance committee works with the auditors. It doesn't mean it couldn't get presented by the board, but it usually is managed by the finance committee. And then of course the compliance aspect being the Form 990, making sure that's being done. And then they should be helping you. I don't think they do this very well, a lot of finance committees, but they should be helping you develop the program reporting, the dashboard, and some of the KPIs. That really shouldn't fall on you to do. That really should be in partnership with the board and the committees as well.
All
And
right.
then, yeah.
Yeah, no, thanks. Yeah, that I love like your perspective from the lens of the finance accounting side. I'm going to go into a little bit
Yeah.
about kind of looking at data through the fundraising lens and through donor data. But I love that you said that you're a numbers guy, you're an accounting major, you're not an English major. I'm actually the opposite. I'm a history major, and numbers and I aren't as friendly as they should be probably. But I
Yeah.
do understand the importance of numbers and of data, and I think
Yeah.
far too often the issues that I see with our clients are around data and having quality data, consistent data.
Yes.
That is to me, and I suspect, this is completely anecdotal because I don't deal with the accounting side as much, that it's more
Mhm.
maybe of a problem on the donor database side than it is on the accounting side,
Uh,
simply because of your, like you said, requiring audits.
You
But I do
you'd be
think,
surprised. You would
oh,
be
really? Okay.
surprised because
Okay.
it's kind of the old adage, garbage in, garbage out. I don't
Right.
want to make myself but it's if the bookkeeping, which is the baseline accounting, right? Bookkeeping, clerical, transactional, is that is not done well and it's not allocated to what you just said, the donor side, then everything
Mhm.
else is done poorly. And
Yeah.
so back to your point. Yep.
Yeah. And without having it, and that goes back to kind of what we were talking about a little earlier too, is without really thinking through about what data you want to get out, what numbers you need to really fully understand who your donors are,
Mhm.
and you can't really engage them very well, and also you're not going to be able to identify in terms of the retention rates, who are your lapsed donors, who are your larger donors, who's giving consistently year to year, that information, if it's not tracked accurately and consistently, it's going to be very, or if you don't have the right solution in place to have get that easily with a click of a button, which you should, you should have a donor retention report that's easy to identify who those lapsed donors
Hmm.
are, and then to have a communication strategy and an easy way to pull out those lapsed donors and solicit them, for example, or identify and maybe easily automate sending your development director or executive director a report every Monday. That's a list of everybody who gave, whatever, $100 or more, so you can personally thank them and steward them.
Hmm.
Having some of those tools in place and having the data in place to be able to do that is incredibly important. And I always say this almost all these webinars is, if you don't have a documentation on how data should be going in to your donor management system, you should. Because
Hmm.
the turnover is way too high, especially in development departments of nonprofit organizations. Its average is around a year and a half.
Hmm.
That data isn't going to be reliable, and you're not going to be able to do what I'm talking about here on the slide, which is
Hmm.
identify, segment, reach your particular constituents where they're at, and really being efficient about how you're doing that, right? And
Yeah.
if you can't evaluate them at a really basic level, like re, recency, frequency, and monetary size, at the very least,
Hmm.
in your donor database, then you need to
Hmm.
call us and we'll help you out. But you should be doing more than that. There's other things you can do. You can enhance the data that you have, that
Hmm.
you're collecting with data outside of your organization. There's prospect research firms, like we partner with one called Donor Search, that
Oh, search. Yep.
makes it very easy to get even more information, on these people, what their propensity to give to organization is, what their capacity to give is,
Hmm.
board affiliations, volunteering in other organizations, et cetera. And that's really going to allow you to analyze and segment based on interest and giving history and engagement level. Are you tracking all your communications that you sent out to them? Are you inundating them too much with spam? Are you not?
Well.
But that allows you to look at those common traits and giving patterns and preferences. Are you collecting their preferences? How do they like to be communicated with, when they give a
Hmm.
donation? Do you give them an option to say, yeah, I want email, or yeah, snail mail is my jam, or whatever?
Hmm.
And then
Hmm.
having a solution allows you to easily make sure that you're communicating the way they want to be communicated with. My mom wants to be communicated a lot differently than me versus my kids. My kids only use their phone. I use email. My mom
Hmm.
wants snail mail, right? So
Yes, whatever media that they want to use. And just to add to what you're saying, I find that the best organizations have that, where the fundraising and the finance departments work well together, and
mhm,
share data and all that. It's not just about reconciling two systems. It's just that collaboration towards meeting the needs of that mutual customer. And I find that that is where they're the ones that do the best, around rate fundraising and financial reporting back. So.
yeah.
Yeah.
That's a great point. I do see sometimes some mistrust between
Hmm. Oh,
the
there
two
for a good
departments.
reason at times. I'm in the middle here, but
The accountants, like, I don't
I
trust that
I
donor
get
data
it.
over there. I'm not having them say.
Yeah. Well, we work with a lot of auditors, and I don't always trust the auditors, but yeah, there's a reasons for some of that, but I find that it's just a lot of it's just communication and understanding how each of the departments work. But if you find where the differences can actually be powerful towards getting the collaboration, when you find out they're really not as much different as what you might think,
Yeah,
it's just the needs are different. But yeah, the revenue recognition rules they're not going to change. I mean, they were established in 2018, so at least on the accounting side, they're not changing anytime soon.
yeah,
I think and I understand on the development side too, why it's important to have that to not match up with the accounting standards as well in some cases. I get it.
yeah,
But I think it's just having that open communication. And then to be honest, it's all starts at tone at the top with the executive. I'm not going to blame the executive, but I think it's all based on that tone of collaboration
yeah.
and all that as well. So.
That's a really great point. And it's even more important now, I'd say, than ever. I mean, for example, this is just a real brief example, is the donations coming through donor advised funds has just skyrocketed, right?
Hmm.
Are
Yep.
you in sync with your accounting department about how you track donor
How you
advised fund
track it.
donations, right?
Yep.
Do you have a system that even allows you to do it? Like, meaning,
Yep. Yep.
I see some organizations are just throwing it under the donor, even though the check came from,
Yep. Came from
a
something
different
else.
entity,
Yeah.
Fidelity, or,
Right.
Silicon Valley
Right.
Community Foundation or something like that.
Right.
So,
Right.
you need a system that's going to allow you to put the check in under the entity that actually sent it, and then
Yep.
you can soft credit the individual who initiated the gift, right?
That's right.
And then in your
Yep.
financial reports, you got to make sure you exclude soft credits to balance with accounting. But if
Yep.
without that collaboration, you just see that's where the
And,
auditors struggle, right?
and again, that's where that's why you need the donor software to do the things that the accounting software is not going to be designed to do, nor is it
Exactly.
going to change, regardless of whether, even if you want an ERP solution, it's not going to do. So the
Yeah.
reality is you need that subledger, pardon the term, but you need that other way of tracking it, so it feeds that the historical general ledger. But you have to have that. So
I,
that's why I think everyone should have a donor. Even the
yeah.
smallest organization should have some sort of donor management. So,
And I do see sometimes organizations on the fundraising side not track information because they think, oh, it's only for accounting and we aren't reconciling, we don't
hmm
care. But even that,
right,
tracking
it's important.
where a donor wants their money to go to is very important. I see sometimes
Yeah,
they're not
it's
even using the
huge.
fund codes in our system. And
Mm-mm.
it's like, you really need to know this is this is they're just giving this money, you can use it for whatever, it goes to your general fund, or hey,
Yep.
this is to go for your endowment, and you should know
Yep.
that because it's important for you as a fundraiser, not just the accountant, right?
Yeah, yeah,
um
and you need to know those restrictions, with and without restrictions, and what the restrictions are and when they're met, and
mhm,
all that, because you don't want to be what's called underwater. You don't want to have so many restrictions that you can't meet your payroll, you can't pay for your employees,
yeah,
as well. So you may have raised plenty of money, but if you can't use that to meet the organization's needs, then
yeah,
you haven't met the organizational
yeah.
stewardship requirements. So yeah.
All right, I'm gonna get to the next slide. I could
Yep.
talk
No,
to you
you're
all day,
good.
Jim.
Sorry.
No, 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 I love it.
Okay.
I'll get to. I've got a few more slides, and I'll get through these, and
Okay.
then I think you've got one too to share some resources. But and then we'll do. I want to leave some time for Q&A. So
Sure.
knowing and understanding your donors, I mean, this is really just reinforcing what we were just talking about, right? Making data is important, tracking information so you can segment them and steward them, and be thoughtful about your outreach, and customizing your engagement strategies, right? And so you can focus your resources on high potential donors, maximizing your ROI, right? Creating understanding them so that you can tailor your messaging and your campaigns, to demonstrate that you understand and you value them, right? Your supporters, and you're fostering trust and loyalty by doing that. And you can do that through your data, right? And we talked about expanding reach through meeting them generationally on how they want to be reached, through digital channels and through social media. And is there I see some of our prospects come to us and look at their websites, and I kind of cringe. I can't even look at them on my phone, or there's no obvious way to give when I go to their main page on their website. Just basically data-driven insights are going to allow you to just continually refine and improve your strategies and ensure ongoing donor support is what it's about, right? Having all that data in one place is going to help. Having connections between your fundraising solution, the constituent management database, and your financial system is going to help, and reconciling those on a regular basis, et cetera. It's really going to help. All that's going to help with stewardship and relationship building, which is what it's all about. All right, if you go to the next slide, Gabby. And communicating your story with impact. This screenshot here on this slide is actually from one of our clients, Boys and Girls Club of Salt Lake. There's a link there if you want to check it out. They did a great infographic for an impact report. It just sort of, it really kind of took, let's say, what you might say in a lot more pages in an annual report, and distilled it down to just some sound bites, and make it visually compelling. And they did a great job of showing their donors and their supporters, what they're doing with that money. And they sent it out via email, they put it promptly on their website, but really communicating the impact that your supporters are having, is hugely important. And some of that data is coming from the fundraising database, some of it's coming from the financial side, and that's why it's important to have both of those tight and accurate. But and again, setting up that solution from the get-go, so it's very easy. There's a pie chart on there. If you can't see it, it's too small, but it should be very easy for you out of your donor database to create a bar chart of where how much is coming from individuals versus foundations versus government organizations, et cetera, if you have it set up correctly and if you have the right system in place, right? So being able to efficiently communicate your story with impact should be a priority for your organization if you're not there already. All right, if we go to the next slide, Gabby, I just want to make sure we get to Jim's piece about his some of the resources he has available.
Yeah, and the article that kind of the summary article, these are all on our blog site, which is our newsletter articles. So there's actually links on there. I know in 2025 we're all hesitant to click on links, right, Gabby? But basically, like if we did the presenting financial reports, I know we're kind of running out of time, but any of these would have the actual newsletter article, the blog article, and you can kind of check those out. You can share these with your obviously internal accounting department as well. And there's also some internal financial reports there, and then reporting financial information to the board. And then if you do want to focus on developing dashboards and kind of the charts and graphs, then there's actually goes through the entire process of developing dashboards and what you should be doing rather than just taking from another organization. Or maybe just a board member that says, hey, I have these for my business. So basically, kind of what you would do there. So I think I'll just let them kind of do those on their own. Gabby, we can kind of hit the website later, but I kind of want to make sure we get plenty of time for all the Q&A and stuff as well. So,
Yeah,
Yeah.
we'll include a link in the follow-up email that'll go to your website, Jim, where they can find all of these blog pieces and
awesome.
articles to read through.
Yeah,
Okay.
at
All
your
right. So
leisure.
yeah, no, thanks, Jim. And Jim and I are now just going to tell you a little bit more about who we are. So, Riva's been around for over 35 years. We've had over 6,000 clients worldwide. We've done over 30,000 live virtual hybrid events, galas, fundraisers. So really we're about donor relationship management software, online fundraising as well. We have auction
Mhm.
software. We even have client tracking software too on the client management side. So, but our software was purpose built for the nonprofit industry, we have been vetted and approved by many national organizations, Tides Foundation, Variety, Ronald McDonald House Charities. We have over 70% of them using our software. Boys and Girls Clubs, uh, Jewish Federations, Meals on Wheels, Cancer Support Communities, Gildas Clubs, many, many more. So next slide, Gabby. The challenges organizations that we talk to every day are facing are just like we talked about at the beginning of this. They're using too many point solutions. It's very difficult I just talked to an organization earlier this week, Jim, that's just like struggle. It took them a week and a half to get a mailing list out, to do a
Mhm.
solicitation because they've got their gala software in one place. They've got their donors in another. They have their peer-to-peer and team fundraising in another software. So if you use an application or a solution like Arriva's, you can have that all in one place. And ultimately, it's going to make your lives a lot easier. So in terms of our all-in-one solution, this is what we offer. I'm not going to go through all these bullet points, but you can see we have a very comprehensive and mature and robust donor relationship management solution, along with a full digital fundraising suite, just from standard donation pages to recurring giving, tribute donations online, take pledges and payments online, peer-to-peer giving, team fundraising, take event ticketing, purchases online, sponsorships, membership renewals,
Right.
volunteer registration. There's a ton. If you want to learn more about us, please reach out. And then the last slide I'm going to talk about, Gabby, is just this gives you a visual representation of our fully integrated solution. All right, Jim, you tell people a little bit more about yourself.
Yeah, and
Well,
just to highlight really quickly, there's a poll up on your screen. If you'd like to
yeah.
learn more about Ariva's software and solutions, we can have someone from our team reach out and give you a tailored demo for your organization. So just go ahead and hit yes, and we'll make sure someone gets in touch with you. Thank you.
Thanks, Gabby.
And your product's a fantastic product just from our mutual clients that we've worked with over the years. I have a single slide, so as an accounting firm, but here it is. And basically, we just help organizations. We have several hundred clients at this point, and have helped thousands of organizations with their accounting training over the years. And we do provide a lot of these as free resources. There's the QR code. But as Gabby said, if you go to the ftmllc.com, which you can do on your mobile phone, so you can do that while you're, paying attention right now. And feel free to sign up for a monthly nonprofit forum. It's free. Everyone likes the word free. And you can also subscribe to our monthly newsletter. And then again, our focus is more on the accounting side. So you might need to pass this along to one of your colleagues, but we are focused in the accounting area on bookkeeping, accounting, controller, CFO. We do work with QBO, and there's some other products, MIP, fund accounting, and potentially Sage Intacct, depending on what your needs are. But again, just feel mainly accounting services is kind of what the takeaway would be. And I won't go into my elevator speech because I want to hear what questions you guys have. So.
Thanks, Jim. And if you'd like to learn more about financial technologies and management, go ahead and hit yes on that poll, and we will make sure Jim and his team receive your name and information so they can give you a call as well, too.
And I think the big takeaway is just take advantage of our resources, make sure that, again, we have clients that we, don't always provide services for, but they use our resources. Again, is we're really just a community to help each other. So,
Yeah.
yes.
Well put.
Thank you. All right, so let's get into our Q&A. We don't have any questions right now in the Q&A or the chat, but if you did have any
Okay.
questions for Chris or Jim, please go ahead and enter them in the chat or the Q&A, and we'll get them answered right away.
Film live.
Jim, can I ask you a question?
Yeah, maybe.
I
That's good.
only asked this because I had someone ask me this, a client.
Okay.
They were using QuickBooks Desktop. I can't remember, 2024, something like
Yeah,
that.
that's the
Have
last.
they
That's
end
the
of
last
life to
version.
that? Is that correct?
Yeah, they have it. It is end of life, but they're
Okay,
not providing any updates to it. We actually like the desktop version a lot better for
sure.
years,
That's what I hear.
but
Yeah,
it's taken a long time for their online version, and now they keep throwing things in that aren't nonprofit. That's why I always say that there's really not a nonprofit version per
version.
se,
Yeah.
but you can kind of make it work. But it is very on the, it's very well priced subscription wise, but you can also get up higher priced just based on volume of accounts and things like that as well. So, and we do find when the kids get home from school, it slows down because it's web based and
Hmm.
it's not single tenant, it's multi-tenant, so it can be slow, at times in terms of access because we use it for our production clients as well. And so, we do use it, but like I said, once our clients kind of outgrow it, then they move to a true fund accounting
Fund
system.
accounting.
Yeah.
Okay. Yeah, because we do integrate with both desktop and online versions of
Hmm.
QuickBooks.
Yeah.
Obviously, the online version allows us to integrate a little more easily just
A
because
lot
they're both
easier.
online. Yeah.
Yeah. And
But
then
I do hear
online,
it does it's not as robust as the desktop version, right?
yeah,
Yeah.
and the online will do bank feeds and things like that. So, as well. So
Yeah.
that seems to help too. But yeah, no, I could answer that question. So there we go.
All right.
Yeah. But again, love to hear what others have to say
Yeah.
as well.
Well, I don't see any
Oh,
questions
so
coming
we must have
in.
answered. Oh, we answered their questions. I hope no one goes away without their question being answered. I would not want that. So feel free to.
Definitely. Yeah.
Okay.
Well, if anything as well, you're going to receive a copy of the PowerPoint presentation as well as a recorded version of the webinar. And on that page where those are located, there is a form. So if you do think of any questions, we'll make sure
Oh,
it gets
good.
to the right person for sure. All right. Well, thank you so much, Jim, for being a part of the webinar. Thank you so much,
Yeah.
Chris. This was a really great session.
Yeah.
I learned a lot too. I'm sure our attendees did as well.
Yeah, and I really wanted to thank both of you for just, obviously we've gotten to know each other very well, and I hope I can help in the future. And I've really getting to know just your client base and working with you guys. It's a pleasure. So thank you for including me today. Appreciate it.
Thank
Thank
you.
you, Jim. It was our pleasure.
All right.
All right. And for all of you, we hope to see you on our next Ariva webinar. You can always head over to the Ariva site under resources and see all of our past webinars. We have a ton of great content along with
We do.
this session from today. So we hope to see you on our next Ariva webinar and make it a great day. Thank you.
Thank
Thanks,
you.
Gabby. Thanks,
Okay.
Jim.
Thank you both.